All righty. Well, thanks everyone for attending and showing up on this glorious, beautiful day here in central Minnesota. This is tax season, as we're told, and it's a really exciting topic. And what we hope to do is hear from some of our experts up on stage here, and then run through a brief PowerPoint looking at some graphs primarily. And some kind of figures to sort of set the context. I do want to do some brief introductions. To my far right over here, Mary Jepperson is a CPA, a CFE, and an associate professor of accounting and finance here at St. Ben's St. John's. She graduated from St. Ben's and got a master's at St. Cloud State. She has a long career in the private sector, working as an accountant. In fact, she was the first female partner at the Minneapolis office of Coopers and Lybrand. And then when Price Waterhouse merged with Coopers, anyway, she kind of merged into forensic accounting and participated in a number of high-level cases and is a certified fraud examiner. So don't cheat on your tests in Mary Jepperson's class for sure. She's a very accomplished instructor, professor here at St. Ben's St. John's, has won several awards, one of which was co-won by a gentleman sitting to my right here, Warren Bostrom. Is also an associate professor of accounting and finance, 95 grad of St. Ben's, or St. Ben's St. John's. He majored in accounting, got a master's at the University of Minnesota. Also has extensive experience in the private sector, working at a Big Four accounting firm. He continues to do some consulting work in the area of taxation and tax accounting. Really looking forward to hearing both from Mary and Boz this evening. Finally, in the middle, former Congressman Tim Penny is now president of the Southern Minnesota Initiative Foundation. Prior to that position, as I mentioned, he was in the United States Congress and the U.S. House of Representatives for 12 years. And prior to that, catch this, at age 24, he was elected to the Minnesota State Senate. He has a long resume, which I can't get to all of it, but he's co-authored 3 books, and he really is known as an expert in the budget process. He serves on the board of the Concord Coalition and numerous other kind of advocacy groups that deal with budgetary issues and budget process. He's also co-founder of the Economic Club of Minnesota with Mark Kennedy, and some of you have met Mark and so forth. So I've got to know Tim a little bit through the Economic Club, and last, he is a professor at the Humphrey School as well, where he taught a class on budgeting on Monday, you said.
Night.
So
every Monday.
Yeah, every Monday. So we're really pleased to have all 3 of you here today. Thank you. The format, just real brief, some facts and figures. I have a couple questions. We're going to get to your questions real quickly, so be prepared. As usual, politics and a pint, come and go, get pizza, get a beer, whatever you want, and interactive format will be the model here. So, yeah, with that, Tyler, hit it. When we think of taxes, I think a lot of times we think of the income tax. But this graph, or this chart rather, illustrates the plethora of taxes and various tax hits that we can take along our lifetime. And we're not going to go through all 97 of them. In fact, I was kind of looking through. I'm sure there's taxes that are not on this list. But the point of this chart is that there's taxes all over the place. It's not just the income tax, which gets a lot of our attention, of course, especially in April. Next, I just want to show you this illustration clearly reveals the complexity of the tax code and the increasing length of the tax code, as you can see in this graph here, which we'll talk a little bit about that complexity later on. Where does Minnesota get the revenue? And then we'll talk about the feds in a second. So as you can see here, if I were to ask you, how many of you think that the #1 source of revenue for the state of Minnesota is the federal government? I'm not sure many of us would answer that. But in fact, about 1/3 of the revenue is from the feds. Moving right along, where does Minnesota spend the money? So you have revenue, taxation coming in. Where does it go? And this graph pretty clearly illustrates the health and human services and education are the top two points of expenditures. Moving right along to the federal side. Here you see, again, the income taxes, but you see Social Security or the social insurance taxes, otherwise known as the FICA tax or the payroll tax. And well, again, we'll talk a bit about that. All of you have paid that tax, I presume, if you've earned $1 in the United States. But Mary has a comment on this.
Yes. How many of you students borrowed money to go to school this year? Do you consider that revenue? No, but the federal government does. Notice the deficit, 19.7%. 19.7% of the federal government's revenues were from borrowing money. Now that we call that creative accounting in our department.
Thank you. Moving right along. Where does the federal dollar go? We'll talk a bit more about this. You look at the federal expenditures that you can separate the spending into two general categories: discretionary funding and then non-discretionary or entitlement. And here you can see that about half, give or take, goes to entitlement spending. Roughly half goes to discretionary. Where does the money go? As this dollar bill kind of illustrates, military is a big part of that, healthcare, and so forth. What do we get for our taxes or the dollars? This chart illustrates relative to the GDP of the United States. We're actually at the very bottom compared to the other industrialized democratic countries in terms of government revenues relative to the GDP. So moving right along, this is a slide from the Concord Coalition and Tim Penny's PowerPoint that he sent. It's really quite clear the change in the non-defense or the increase in entitlement spending. This is kind of mandatory spending that you see in the blue section there. And when we talk about tax policy, it's one thing to talk about what will be taxed, but the other side of the coin is what will not be taxed and what tax breaks will be allowed. And we have a list of 10 of the most popular individual tax breaks or tax expenditures is another term that people use. And healthcare, or the fact that employer-provided healthcare is one of the biggest ones. And mortgage deduction is another one. Student interest on your student loans is another one, and so on. So these are, we all love these, but they also impact what Mary was just saying earlier in terms of the deficit and debt. Corporate tax expenditures. Again, these are kind of tax cuts or tax breaks and that type of thing. Again, you can see the long list there. Very popular, tough to deal with. Hopefully we'll talk a bit more about that. And I think, do we have one more? Yeah, at least one or two more. Yeah, this is the depressing slide, as if the others weren't. But and this is exactly what Professor Jepperson was saying earlier in terms of the debt deficit issues. Looking forward, you can see it's not a pretty sight if we do nothing. So hopefully we can talk a bit more about that as well. Tyler, is there?
And back up,
Yeah.
the important line here to
Going
focus
back one,
on,
Tyler?
if we can. The yellow line just indicates historic levels of tax revenue coming into the government as a percent of our economy. So obviously that line can go up, and it most likely will go up because of our spending challenges. But that's not an easy thing to do, and everything above that yellow line is projected spending in the future that will be deficit spending unless we do something about it.
And the next slide. Yeah, again, spending versus revenue. You can see that revenue, in fact, did exceed spending there for a time, but now we're back into deficit spending, and depending on what the policymakers decide, it's again not looking pretty for the future. And that that does it. So with that, again, I have a few questions. Kind of keep this open flow. We'll go to you all real quickly. So, you ready? My first question. No one seems to like taxes. I haven't met anyone that campaigns, other than Minnesotan that ran in 1984, talked about taxes and raising taxes, but no one seems to like taxes. Why do we have taxes then if we don't like them? Just get rid of them.
Who wants it?
I'll start out. There's certain things that everyone needs that no one's willing to pay for individually. We as a country need a strong defense, so we need a military. You like to drive from here to St. Cloud to the cities. We need roads, bridges, infrastructure. No one's individually going to pay for those things. So there's certain things that are necessary for the public good that simply cannot be billed out to us individually as we use them. And so that's the primary reason we need taxes, is to provide for those items that are for the public good.
Yep, that's the bottom line. But I think over time, what we have learned is that collectively we are looking to the government to do more for us than we are willing to pay for. Over the course of the last 40 years, it seems like every time we bump up around 20% of GDP in taxes, we then elect people who will cut our taxes. But we very seldom elect people with the idea that they're going to cut our spending. And increasingly, more and more of our spending are programs that are locked in with future costs that are based on eligibility standards. If you're old enough, you get these program benefits, and much of this is in the entitlement area for Social Security and Medicare. And so we've really disconnected our spending decisions from our revenue decisions. And I think it's distorted the public debate about our federal budget in recent years, because we sort of fallen into the trap of one side saying no new taxes, as if that's the way that they're trying to stop spending, when they don't necessarily talk about spending restraint, they just talk about tax restraint. And the other side, recognizing that we do have more spending than we have revenue, continues to insist that there's only one category of Americans that have to pay for these excessive costs, and that's the rich. And so I think we're getting a false debate from our political leadership, with one party basically saying tax the rich, as if that's the only answer to all of our current and future deficit problems, and the other in a mindset of no new taxes, because it's difficult for them to succeed politically by cutting spending, so they go with the popular option, which is to either cut taxes or promise not to increase taxes.
Thank you.
And
Boz, you want to add?
Just briefly on that, I do a lot of tax returns for individuals, a few dozen each year, and as a whole, the people that I do tax returns for are not very charitable. And I do think that that's a reason that we have taxes as well. I have the strong Christian clients who might give a fair amount away to church. I would say outside of church, it's easily less than 1% of people's income that they're giving away, probably close to 0.5%. And so when we truly do have people that have needs out there, I don't know that we're helping our neighbor as much as we need to. Now, there's people that may have perceived needs that we don't want to help because maybe they should just have a stronger work ethic, but there are people with true needs out there who do need to get help somehow, and the government does feel a responsibility to jump in because neighbors don't always do that.
Thank you. So we established that generally we don't like taxes, but we need taxes. What is your favorite tax?
Favorite?
Or favorite tax rule, if you will, tax policy? Do you have one?
You want me to jump in? Go ahead.
Yeah, well, both of you were accountants in your previous lives, so.
No. Gosh,
Tell
you
me
go
what-
first.
I'm very biased toward charitable contributions, I guess, so I really enjoy that there's a deduction for charitable contributions. I think that they would go significantly down if there was not the tax deduction for them. My second one has got to be just the very popular mortgage interest deduction. So I think the American dream of owning a home and being able to deduct your interest and property taxes on that really enable home ownership. And when done correctly and not over borrowing, people can get into that home of their dreams.
Excellent answer. Anyone else want to weigh in on your favorite tax
Well,
or tax
I'm-
rule?
I'm inclined to say the payroll tax because we all pay it, and we all pay it knowing why we're paying it. And maybe second to that would be the gas tax, because we all pay it and we all know why we're paying it. I really like, as a general philosophy, the notion that we pay for the government we want. And those are two taxes where we're trying to do that very thing. I think the tax debate and the spending debate gets sort of distorted when you get outside these programs that have dedicated revenue sources.
And if I had to name a favorite, it would probably be the sales tax, because the more you consume and the more you spend, the more tax you pay. It does tend to hit poor people fairly hard, but there are earned income credits and things that help offset that burden. So
But-
again, it's sort of proportional to what we consume.
But Mary, I think you're biased because the sales tax does not apply to clothing.
I'm totally biased.
And it does not
And
apply to
shoes in
accounting
particular.
services either, so.
In Minnesota.
Right,
in
had it
Minnesota.
applied to that, it would be
Well,
on my least
and
favorite list.
whenever the state of Minnesota tries to broaden the sales tax, there's a huge pushback on those very two issues. But if you look at
But we're
tax,
quite well dressed
if
here
you
in
look at
Minnesota.
tax policy from the standpoint of some virtues or some values that ought to define our tax policy, one of those values would be stability, so that we don't have revenue coming in, very generously, and then the next year, because of a slowdown in the economy, the revenue falls through the floor and then it's back up again. The sales tax is more stable in terms of the revenue it produces for the government, provided it's broadly based, which would mean the accountants and clothing would be included, and food might even be included, not the food you buy at a fast food joint, but the food in the store. The broader the sales tax, the more stable the income to the government, and because the income tax can be very volatile. And one of Minnesota's problems with our recent deficits, and many of you are too young to even have paid attention to the last decade of fiscal politics in Minnesota, but one of our problems is that we rely in Minnesota far more heavily on income taxes than do a lot of our competing states.
Tim, you mentioned payroll taxes, and so this is a nice segue to my next question, which herein I'm quoting you from your book, 15 Biggest Lies in Politics. Great title. Quote, payroll taxes are like the Tasmanian devil from Bugs Bunny cartoons, ravenous, terrifying, and reckless. The bottom line is this, quote, tax reform that does not address the systemic inequity of the payroll tax system is not worthy of the name.
Yep, and that gets to the conversation you and the two professors and I had offline over there just a moment ago. Because we do have a situation in which probably 80% of Americans pay more in payroll taxes than they do in income taxes. So when we talk about, progressivity in our tax code, yes, the income tax is very progressive. We go from 15% to 39.6% in four categories. And so that's progressive, but it applies, but when you add in the payroll tax, you find here again that 80% of Americans pay more in payroll tax than they pay in income tax. And so it's a burden on them from dollar one. And for low-income families, they're not burdened by the payroll, the income tax because they pay none. They're burdened by the payroll tax. There has been some discussion about exempting the first, $10,000 or whatever from payroll taxes. I would argue against exempting income from the payroll tax, because here again, we're all in it together. This is a program, Social Security, that we all expect to benefit from at some point. So even low-income people should contribute. But we try to remedy that through the income tax code, where in addition to our lower rate for lower income, we also have a refundable tax credit for, we call it the earned income tax credit, for low-income households, and that becomes a negative income tax. And that then helps reduce part of that payroll tax burden. And the reason I like doing it that way is because it is really more targeted to working families than if we simply had an across-the-board exemption of the first $10,000 of income exempt from that tax.
Thank you. Boz, you mentioned you did some work in international tax issues, how does the United States compare to other countries with respect to our tax code and taxation in general? And Mary or Tim, feel free to weigh in on that as well.
International tax reform is a very hot topic right now and is, in my view, probably going to happen before significant individual tax reform. The United States, the way that they do it is if you earn money in foreign countries and you keep your cash there, you will not get taxed on those earnings.
In the U.S.
In the United
States.
States.
In the foreign country.
Yep. So, so a huge strategy of companies to do is to shift as many other earnings to low tax countries as possible and keep their cash there. Apple right now has about $112 billion sitting in low taxed foreign jurisdictions. Obviously, having that cash sitting in Swiss bank accounts or whatever it is not great for the economy. So a strong way to look at international tax reform is trying to not provide a disincentive for Apple and companies like that to do that. So what they're really trying to shift to in international tax reform is to make it not nearly as costly to bring that cash back to the U.S. Because right now, if you make a bunch of money in Switzerland, you leave it there, you enjoy a huge tax benefit. You bring it back to the U.S., you have a huge tax cost. So they're trying to reduce that tax cost when people bring their money back to the U.S., while reducing the loopholes of getting that of allowing people to earn money in foreign jurisdictions.
You guys want to comment on
I do consulting for Pentair Inc. They're a Fortune 500 company in the Twin Cities, and it's public information that they moved their headquarters to Switzerland to save tax dollars. I mean, I'm not saying anything secret. I would lose my consulting contract there. But when I consult to them, I still go to their Golden Valley headquarters, but now the corporate headquarters is in Switzerland. No one sits there. Board members fly there 4 times a year for board meetings, and it's also they can take advantage of Swiss tax rates compared to U.S. tax rates. U.S. tax rates are the highest corporate tax rates in the world, so that's part of the issue.
Even the goody two-shoes band U2 got in a little bit of a trouble with moving some of their profit to the Netherlands, if I remember right. We're going to turn to the audience here in a bit. I asked you earlier about your favorite tax. How about your least favorite tax or tax rule, tax policy? What doesn't work? Mary, you look like you're ready to say.
I actually have 2 or 3, and there's so many least favorites. One of my least favorites is the alternative minimum tax. It is extremely difficult to compute. I am a CPA. I literally cannot do my own tax return without getting software from TurboTax because I can't figure out the rules for alternative minimum tax. The alternative minimum tax system was designed to make sure that the rich people paid at least a certain minimum amount of taxes. And there's easier ways to get there. If I had a golden wand, this might not be very popular with many people, but I would tax capital gains at ordinary income rates. Oh, it would simplify tax accounting tremendously. You could do away with the alternative minimum tax. You could do away with a lot of funky maneuvering to shift assets so that they generate capital gains versus ordinary income. Right now, the capital gains rate is capped at 20%, and the individual rates can go up to 39.6%. So people like to shift their income. So those are the two changes that I would really focus on.
Thank you.
I'll mention one. There's a new payroll tax of nearly 1% on all income above $200,000. The payroll tax was instituted for two reasons. One, to pay for Social Security and Social Security disability, and the other to pay for Medicare. This is really an extra 1% that's supposed to help us pay for Medicare. The problem I have with it is that it's being double counted. That it was raised as part of the Affordable Care Act in order to help offset the new costs of the Affordable Care subsidies, and yet the money is still being counted as if it's going into the Medicare program. You can't spend the same money twice, so I don't particularly like that tax because of the way it's being treated for budget purposes.
You know, I'd have to say certainly mine is probably excess taxes that are imposed on alcohol.
I knew you were going to go there. I thought you were
that-
going to say
That's a
sin
huge one.
taxes.
That being said, I have a $20 bill. If anyone wants to get me a fresh beer, they can do that. Kevin's coming up, and if you need a fresh beer yourself, you can also buy it out of my $20 bill. I'm not encouraging alcohol consumption, but I'm just saying, so like some sort of ale, India Pale Ale, something dark.
That's the first
So,
that's ever happened.
Yeah.
I like it. Love it.
So I'm gonna agree with Mr. Penny here that the new Obamacare surtaxes have really thrown a big wrench in things. I mean, I'm a CPA and I do a few dozen tax returns a year, you know, and I really wouldn't even want to compute this kind of stuff without tax software. Mary mentioned that, and she just pretty much does, you know, her own and a couple other people, but I would not want to do it even myself. It's just got so complex. I would have preferred, if they need to raise taxes, do it just through an increase in the overall tax rate as compared to hiding it in different taxes. I should note as well that I am a tax guy. Mary's an audit person. Mary and I have a partnership where we provide consulting services. Mary does our tax return, and I'm very thankful.
All right. Well, with that, we have a couple microphones, and we're going to turn to you all if you do have questions. I have a long list of other questions we can get to, but I want to turn to some folks in the audience. Katie, you have the microphone. We'll start with you. Thanks for volunteering.
Sure, of course. So, can you go back to a slide for me, Tyler? Can you go back to the one that has the pages for the tax code?
Thank you. Didn't you get your cell phone? No, you didn't. Okay.
Okay, so my question is, why does the tax code need to be 72,000 pages long? And obviously no one reads that, so like, why is it necessary, and who benefits from it being that long, and like, who's hurting from having 72,000 pages worth of law?
Well, we accountants benefit greatly from the tax code being this long because people need to hire us to do their taxes, as do tax software companies. I pulled out my tax return last night and then I needed a beer. But, all right, I had, you know, my husband is in sales, I teach. For my federal return only, I filed a 1040, a Schedule A for itemized deductions, Schedule B for interest and dividends, Schedule C, profit or loss from our business, Schedule D for capital gains, Schedule 8949 for sale of capital assets, Schedule E for supplemental income and loss. I'm not done. Schedule 6251 alternative minimum tax, Schedule 8959 additional Medicare tax. That was the tax Tim Penny referred to. Schedule 8960 net investment tax, Schedule 8801 credit for prior year alternative minimum tax, Schedule 8582 passive activity loss limitation, and Schedule 8263 non-cash charitable contributions. It's no wonder I need to pay, you know, to buy software. So personally, I think if we put all members of Congress in a room with their accountants and made them fill out their own tax returns, the tax code would shrink tremendously. We'd get some simplification.
In my defense, when I was in Congress, I voted for the last major overhaul and simplification of the tax code. But I'm afraid of two things. First is that even though we greatly simplified the code and lowered rates back in 1986-87, there were probably, instead of reducing the number of pages of regulations, probably even more pages of regulations to help people understand how to adapt to the new changes. And then secondly, it takes no more than a decade before we clutter the code up again, because all of these deductions and credits are very popular as a one-off debate and discussion, and it's easy for politicians, just like on a spending program, to lose sight of the bigger picture, that we'd be better off with fewer deductions, credits, and a lot simpler system. So it just gets cluttered up again quickly, and it's now been 20, going on 30 years since the last tax simplification, so we're long overdue for a cleanup.
Yeah, and I just say there's people like me out there that get paid to try to help clients get around paying taxes. And we'll find the loopholes, and then Congress or the IRS has to shut them down, down the loopholes, and they do that through more regulations out there. So you would have to get rid of a lot of those tax preferences out there in order to eliminate the volume altogether. And at some point in time, that's going to happen, and it's just a matter of when people decide they're going to do it.
Thank you. Do we have another question ready to go here? Couple of hands in the air. Looks like Kevin. Kevin, introduce yourself.
Hello, my name is Kevin Jurek. I'm a senior accounting major here, and I'm also the accounting club president.
And thanks, by the way, I should have given a quick shout out to the Accounting and Finance Club, which is co-sponsoring tonight's Politics and a Pint, so thanks for that.
Thank you. So I just kind of wanted to bring it a little close to home here and just kind of find out kind of what tax implications are there for St. Ben's and St. John's being a nonprofit. And to follow up on that, we have a lot of land, and we kind of covered property tax really briefly. What kind of impacts do we have being a nonprofit along that?
Good question. So nonprofits, they don't pay property taxes, they don't pay sales taxes, they do pay payroll taxes.
Yes. So for St. Ben's and St. John's, first of all, anyone making contributions to them, and by the way, tuition does not count as a contribution, but anyone making a contribution gets a tax deduction for that contribution. St. Ben's and St. John's does not pay income taxes. It does not pay property taxes. It's also exempt from sales taxes. It does indeed pay payroll taxes, so on all our salaries, it matches our payroll taxes. So some people say, gee, that's kind of an unfair advantage. But on the other hand, not-for-profits provide tremendous services throughout the country, and we're a boon to the economy. If you look at the city of St. Joe, the city of St. Joe benefits greatly from having you students here, because you spend a lot of money in town, especially on Thursday nights for some reason. But so there's an economic benefit to colleges and universities, and not-for-profits are providing a vital service, and so that's part of the reason that they are exempt from all those taxes. In some jurisdictions, people have gotten a little bit upset about property taxes. So think about, St. Ben's being in the city of St. Joe and benefiting from the roads in St. Joe, et cetera. There can be a little bit of a push-pull between the residents of the city and then the not-for-profit. Some colleges and universities have gone into paying what are called pilots, payments in lieu of property taxes. It's very common in the Boston area, where there's so many colleges, in the city of Boston, that they make contributions to the city to help support, some of the infrastructure costs. But on the other hand, look at the payroll here, look at what you people spend in this community. It's a tremendous benefit to the area, and it draws in a lot of people. St. Ben's and St. John's do pay income taxes, though, on what's called unrelated business income. So income that's not related to our exempt purpose of teaching you. If you've ever been here in the summer, you see lots of groups on campus that rent our facilities. You see wedding receptions hosted here. We pay taxes, income taxes, on those kinds of items because we're basically, in that sector, we're competing with the for-profit world. You know, the Mulligans, the other places where you could go to host an event. So there are certain income taxes that are paid, but it's just on a tiny piece of what happens.
Thanks. There was another hand up, and then we'll get to Ashley here next. Yeah, go ahead.
Yeah, my name's Joe. I'm a junior chemistry major here, and my question is, it's like over the past, several years, the top tax rate's like been as high as 90%, and you said, it's down to 40% now. And, as you said earlier, we spend a lot of time focusing on just that top rate. My question is just, how big of a factor do you think that really is on economic growth? Do you think it's overblown, or is it really as important as they talk about?
Well, as a member of the 1%, no, I'm just kidding. Go ahead.
That is a good question. I think, I think you can take things too far, needless to say. And so for me, it's really the effective rate that matters more. You can have a much higher tax rate, but as long as you've got deductions and credits, and you may have a much smaller effective tax rate. I think for upper income Americans today, while the tax rate is at like 39.6% on the bulk of their income because they're in that category, the effective tax rate is maybe 28% because of a variety of factors. The first levels of income are taxed at a lower rate, and then they benefit from deductions, credits, and other ways of reducing their tax burden. I am of the view, I don't think we want to go the way of Europe with 50% plus, overall tax rates, with the highest, tax rate being significantly higher than ours is today. So I think there is a ceiling, but having a tax policy that is somewhat neutral to how you make your money and how you invest your money, I think is a much better economic, has a much better economic benefit or outcome than the kind of cluttered code we have today, which steers people in different economic directions just because of tax avoidance.
As the mayor was saying earlier about the capital gains rate versus the income and so forth, yeah. Good question. Boz, you look like you're thinking, I don't know if you want
about the only thing I'll have to say is we looked at tax policy a lot in a course I taught this spring. A couple of my students are still waiting for their grades in that course. I did grade your test 2 nights ago, actually. I'm not sure how you guys did, but I have to remember. But anyway, it's very inconclusive if increased tax rates actually provide a disincentive to work, and in general, there's not a strong correlation that they do. Income tax rates have gone up this past year, and it's not like you see the wealthy people, not working. Where the controversy really comes is, would you rather have the government in control of that money and spending it as compared to perhaps if it was right in the pockets of those wealthy people? They generally don't sit on it, and they would be directly investing it in the economy instead. And there's arguments on both sides of that. So that's when I think of high tax rates. It's not because people will stop working, but it's like who is best used to distribute that money.
Thanks, Boz. Ashley, over here.
I'm Ashley Bukuski, and I'm a junior economics and history major and chair of the College Republicans. And with that, there's also a discussion of just moving to a flat tax rate, and I was wondering, what are your thoughts on that?
Good. Good. 999, Mr. Kane. We have other flat tax proponents. Steve Forbes, way back a few years ago. Flat tax, I presume you're talking about income flat tax as opposed to sales tax flat tax? Yeah. All the above, kind of flat. What do you think of that?
Well, it's hard to get there because the income tax isn't our only tax, and so you really need to look at it in the context of payroll taxes, excise taxes, et cetera. Flatter or simpler would be fine by me, because I think then you take out of the equation the economic distortions. I don't mind progressivity in the tax code, but I think you can retain progressivity with fewer deductions and credits, make the entire code a lot fairer, and you may end up with a top rate that's maybe 35% instead of 40% under that kind of trade-off.
There's, when I think of the flat tax scenario, I've looked at quite a bit. Just to define what it is, there's various ways that people look at it. The most simple way is you just take your income, you slap like 20% tax on it, and you're done. And you could actually mail it in a postcard. I can't remember which. Someone was running for president who was advocating that, but that's the most simple version. Another version of the flat tax you could just take your income and put certain deductions against them and then slap a flat tax rate on that, and that's how you would end up paying your tax. You know, people may say that that's you know, more fair, that the wealthy are overtaxed right now, and that would certainly come more from the wealthy community. Most of those systems are going to increase tax on the middle class, unfortunately. Most of those would still provide an exemption that would help the lower income taxpayers not pay any tax at all. But if you just have a 20% flat tax rate, LeBron James is going to pay less tax. And any reform that is going to that is going to decrease tax on the wealthy, I don't think is going to fly. I think what they probably have to do, if they're trying to get some momentum here to simplify it, is they could have fewer tax rates out there. Right now you pay tax at several different tax rates. So have fewer tax rates and have fewer categories of income and deductions out there, just to make the tax code simpler, is probably where they're going to have to go if they're going to pass it.
And just to put income tax in perspective, the top 20% of the income tax filers in the United States, it's roughly 28 million taxpayers, pay 96% of the income tax right now. So the wealthy are already paying a good share of the income tax, and a flat tax, as Boz was mentioning, would probably shift some of that tax burden down to the middle income. Those people had an average after-tax net income of $181,000. So the top 20% of people with that average income pay 96% of the income taxes in the country in 2010.
How many of you folks have ever purchased anything online? Phil, you haven't? I was going to say, you haven't purchased anything online. Did you pay a tax?
No.
Did any of you pay a tax? Well, so let's talk about that. Internet taxes. Most of us have purchased things online. We don't pay sales tax for the most part, unless that online business happens to be in Minnesota or wherever you are at your computer. What do you guys think of that? Tim, you were mentioning Best Buy CEO a little bit earlier tonight. Any, just in general, comments on this is a big issue that that's coming down the pike. What are your thoughts on that?
Well, the Economic Club of Minnesota hosts a guest speaker typically once a month throughout the school year in St. John, and several other campuses have partnered with us and brought students to the event. We appreciate that. Hubert Jolet, the recently appointed, maybe within the last 2 years, president of Best Buy, came in as a turnaround artist to get the company moving again, and there's significant success that has resulted in the short time that he's led the company. But I think and they're really focusing more on service, because they've got the Geek Boys and all of that, and that's something you don't get if you buy online. And they've got to think, how can a retail box store compete when you can go online and buy all this same stuff? So their biggest complaint right now is that the other big advantage that Amazon and other online providers have is that you effectively don't pay a sales tax on those purchases.
You are supposed to declare that when you file your Minnesota
return. I believe you're supposed to keep your
return.
receipts.
Right.
And
Which
then,
we all do.
Right.
and then fess up with Minnesota Department of Revenue that you spent $300 on Amazon books over the last year, but No one does, and there's really no way of tracking that unless you want the equivalent of the NSA looking at all of your Amazon purchases. So,
Which they might be.
so Jolet, in his speech to our club, in which he talked about, the ongoing turnaround of their company, really laid this out as their big public policy concern. I asked him, since I was the moderator, I said, I don't want to take you off message, but are there some other public policy issues beyond this internet sales tax issue that are important to your company's success? And he came to the microphone and he said, well, at our top leadership team, we continually talk about our 5 public policy priorities, the first of which is internet tax fairness. The second is internet tax fairness. And he went on, and then when he got to number 5, he turned to the audience, because by then they could shout it back at him. So that's their big issue, and frankly, I think they're right. I think if you live in Minnesota and you buy in a local retail store a book or whatever it might be, you're paying a tax. If you go online, buy the same item, you don't pay a tax, you should. And Minnesota should get that revenue.
I think it's something that is coming down the pike. I think they have to do something with it. I have an acquaintance, I'd refer to him as a good friend, but I might get in trouble, but an acquaintance who recently got married bought a $15,000 engagement ring from a store in Minnesota, but had it shipped to Wisconsin, because we have another buddy that's in Wisconsin, to avoid Minnesota's 6.875% sales tax, which on that is over $1,000. So I had the ring shipped to Wisconsin, got to his buddy's house, and of course the buddy called him up and said, your ring's here, come get it, right? In theory, the one friend should have declared tax. It's called a use tax in Minnesota, and should have paid about $1,000 of use tax to Minnesota, but he found a way to get around it. And that's similar to internet buying. So if you just buy from a company who doesn't have a presence in your state, you can avoid that. And that just hurts the competitiveness of business doing locally. So I think that's why you are going to see more taxes there in the future.
But in the interest of full disclosure, I bought some clothing online from a state that charges sales tax on clothing, so I actually did have to pay some extra sales tax.
Oh, that's interesting.
But it was on sale, so it was good.
We have another question. John, and then...
You,
Go ahead.
John Schwan, junior political science major, not from an economic standpoint. You lately touched on nonprofit tax deductions, for contributions to nonprofits. And what are the economic implications of that? And besides those contributions, if they were taxed, or if they were included for tax purposes, what would, economically speaking, what would the projections might be?
So you're saying if we got rid of the deductions?
Yeah.
So if you take away the charitable deduction? Well, president of the Initiative Foundation,
Yeah.
they want a large...
Well, it's, obviously it makes it a lot easier to raise money when you can tell your donors that it's a tax-deductible contribution. So in the nonprofit world, we get pretty nervous when tax reform is discussed, because charitable tax deductions are one of the larger individual tax breaks in the code. And so if you're going to simplify the tax code, the big ticket items are home interest mortgage deduction and charitable deductions, and you can clean up a lot of deductions and credits and not really generate a lot of revenue gain for the government. The big ones are the ones that would have to go away to really generate some revenue gain. But having said that, there are, when tax reform is discussed, there are proposals out there, including the one most recently introduced by Chairman Dave Camp of the House Ways and Means Committee, that do nibble away at charitable deductions. I think what he has done is to say that until your charitable deductions exceed 2% of your income, you can't itemize and you can't get a benefit for that. So that really kind of hurts folks at the smaller end of the scale. and so he comes at it that way. Others have come at it, and this is already partly on the books, by scaling back your overall tax deductions of any sort, including charitable deductions, as your income rises. So the percent of your total income that can be deducted is and exempted from taxes is reduced under things like the alternative minimum tax and some of the other provisions that went through, I think, as part of the fiscal cliff deal a couple years ago. So there has been some scaling back, but by and large, those tax benefits are still in place, and most foundations and other nonprofits that I'm aware of will really raise a ruckus if tax reform attempts to eliminate or even scale back that deduction.
Ken, I see your hand up, but we have a gentleman over here. And then, Ken, you'll get the last question.
Yep. Tyler Thel, accounting major, sophomore. And my question was, you mentioned earlier that the U.S. corporate tax rate is 40%, and that's the highest in the world. Are there any other places in the tax code where the U.S. differs greatly from the rest of the world?
Yeah, it's actually at about 35. It's 35% before state taxes. With state, a lot of people say that it's 40. And then from a corporate perspective, we that's where we do allow the deferral of international taxation. So if you do make money overseas, that you can avoid U.S. taxation on that. But then we do tax that very heavily when it's brought back to the United States. One of the biggest areas I think you'll see reform in is that companies buy hundreds of billions of dollars of equipment a year, and they get some huge tax preferences when they're buying that equipment. In fact, there was kind of a one-time. Normally, you would buy equipment that might last for 10 years, and you would have to depreciate that over 10 years, meaning take a tax deduction over 10 years. They had a one-time kind of economic stimulus where they allowed for you to take a tax deduction of that immediately. And I wish I remember the stat, but I think General Electric purchased, I don't know if it was 10 or 20 billion dollars of equipment in one quarter. It was 4 to 5 times what they would normally do just for the tax benefit. So that's a huge area in our corporate tax code, and I do see that one actually going away as well. The corporate tax reform is really on the horizon, and what you're going to see is a lower tax rate, probably in the 28% tax range, and you're not going to get accelerated deductions when you purchase equipment. So those are a couple big things that are coming down the pike.
I'd just say another difference in terms of the other countries would be the lack of a national sales tax. And, you know, any of you travel to European or South American or, you know, you see Asian countries for that matter too, you see the 25% VAT tax and so forth. But, Mary, you wanted to say?
No, I was going to
Okay.
talk about the value-added tax.
Oh, sorry. Steal it. Professor Jones. Go for it.
Boz, I wanted to go back to your one for the home interest deduction. Why is that a greater social value than anything else? I mean, why would we prioritize that? Versus anything else we could do? I mean, as a historian, I understand why we put it in, when we put it in, but I'm wondering, why is it a social value now? I mean, we have people moving back to cities and living in apartments. Why would you prioritize exurban sprawl with huge deductions for home mortgages? Why is that a social value?
Congressman Penny, this sounds like a great question for you.
Well, let me speak to that in this way. It's been quite a few years since I've been a politician, but I think I still know how. I think I still know how to answer the question that I want to answer, as opposed to the question that's been asked.
Exactly.
Good job.
But if you look at this in a broader context, you got if tax expenditures or tax breaks, tax deductions were counted as part of our budget, it would be 25% of our budget. And so we talk about the budget almost solely as if it's a spending budget. But these tax breaks are meant to achieve certain objectives, a research and development incentive for businesses, home purchases by giving you a break on your home interest, charitable deductions so that we support the private sector in our churches and our nonprofit fire and other associations. The list goes on and on. Here has been my longstanding lament about the federal budget, is that when you've got spending programs for education and then tax deductions and credits for education, when you've got housing programs that are direct government subsidies or government construction of low-income housing, and then you've got the home interest mortgage deduction, you've got programs that are part of the budget and debated as part of the budget, and we know why we're spending money on those programs and what we're expecting from those programs, but we never measure them side by side with a comparable tax benefit that is designed to meet the same goal. And we should. We should say, is it more cost effective to accomplish this objective through the tax code or through direct spending? And I don't see that you're not achieving the same objective. Well, no, I agree, but that forces us to have a conversation about what is our objective in terms of public policy. And if you look at what our public policy achieves, if home ownership is important to us, is this really the most effective way for us to incent or encourage home ownership? Are too many of these dollars, reaching folks not in need and not enough reaching folks who are in need? And so the point I'm making is that the tax code with deductions and credits is really a big piece of public policy, but it's not held to the same scrutiny with the same standards of measurement. What are the outcomes we're trying to achieve with these dollars forgone that we would apply if these were on the spending side of the budget?
And I do owe Ken a response because he directed the question to me, and Ken has been one of my longtime mentors here. So
he feels free to ask you.
He does, yeah. Well, and that's why I love these things. That's a great question. It makes me reflect, and I have to reflect a lot more, look up stats. But in short, and I think I've got some experience because I've had a lot of tax clients that have gone into home ownership as well, and they've talked to me about what the benefits will be when they go from renting into home ownership. And from what I've seen, there becomes a stronger sense of pride and responsibility and taking care of where you live when you own a home as compared to in an apartment. That people, when they own something, will take a lot better care of it than if they're just renting something. I guess the party houses in St. Joe could be evidence of that, but those are college students regardless. But that strong sense of pride in taking care of something, making it a good, safe place to be and raise a family. That's all I got for you right now, Ken.
All righty. Well, with that, I want to thank all of you for attending tonight. I want to thank the Accounting and Finance Club. I want to thank our guests very much for visiting with us tonight. And I want to share with you a little token of our appreciation, one-of-a-kind politician, a Pint glass.
Awesome.
That is not for sale on Amazon.com yet. We can tax the heck out of you, though, if you want to buy one. Anyway, that does conclude the event. I have a signal here.
Really quick, I just want to say that we, on May 4th, we have a highway cleanup, if anyone is interested. You are more than welcome to email the McCarthy Center and let us know that you are, if you're looking for some volunteer hours, so that should be fun. Also, yeah, Save the Planet, NBD. Also, please submit your suggestions for next year's Politics in a Pint. This is the last one for this year. So email the McCarthy Center at csbsju.edu with any suggestions you might have regarding topics that you think would be cool. We'd really appreciate that. So have a great night, everyone. Thanks for coming.
Thanks.